In this video, I'm going to discuss the relative position of fair value gaps and how you can use the market's relative position to a fair value gap to your advantage. Guys, I want to direct your attention to the community tab of my channel. I'm making a lot of posts talking about some of the things that I'm going to discuss in the near future. And so if you wouldn't mind, head over to the community post, and when I make written posts, you can follow along there. So guys, if you go to my channel and you click on the community tab, you can find my written posts. Okay guys, in this video, we're going to discuss the current market price relative to the fair value gap and whether the market is staying above or below the fair value gap, and whether the market is leaving that fair value gap open or it's closing it. So let's head over to our chart and let's get over on the 5-minute chart and look at some examples. So guys, the first thing that you want to do when you're looking at the relative position of a fair value gap, the market's current price relative to a fair value gap, is of course you need to identify some fair value gaps. So, for example, here we have a sell-side imbalance, buy-side inefficiency. Now, in essence, what you're looking for is, okay, number one, is the market coming back and trading in that fair value gap, or is it leaving it open? If the market is leaving that fair value gap open, that's a good sign that the market is going to shoot lower or going to shoot higher in a sustained move. So we're very simply just looking at where is the market relative to that fair value gap. Okay, so here we have another example of a buy-side imbalance, sell-side inefficiency. That you can see that the market came back in and we made an institutional order flow entry drill, but the market price was staying above that fair value gap there, which was a good sign that the market was going to run on this buy-side liquidity, and then it ran on this buy-side liquidity as well. Okay, guys, so this is not the world's most difficult concept to understand. You're basically just looking at, okay, where is the market in relative position to the fair value gap that I'm looking at? Is it trading above? Is it staying above that fair value gap, or is the market closing it out? That's basically it. Now, the other thing that I want to mention to you is to look at both sides of the curve. So for example, here we have a buy-side imbalance, sell-side inefficiency. Now, it was not only assigned to you when the market the buy-side imbalance, sell-side inefficiency that you can see here, you're not just looking at it for on the way up, or in other words, the buy side of the curve. You're also looking at it as the market comes back down. Okay, so as the market came back down, notice that when the market traded through this buy-side imbalance, sell-side inefficiency, that the market did not trade back up into it. In other words, it left this buy-side imbalance, sell-side inefficiency open, and the market was trading lower, which was a sign that we were going to run on these short-term sell-side liquidity. So one of the ways that you can use the fair value gap, and I'm going to keep this video pretty short, is look at the current market price relative to the fair value gap. Are we trading above the fair value gap, and are we leaving it open? That's buy-side imbalance, sell-side inefficiency. Or do we have a sell-side imbalance, buy-side inefficiency, which is the bearish fair value gap, and are we continuing to trade below? So take your fair value gap and look at the current market price relative to that fair value gap, and that should give you a hint on where the market wants to go. Okay, guys, I'm going to keep this one pretty short. There's not a whole lot more to discuss other than what I just talked about here. You can find my referral links, Apex Trader Funding, Top Step Trader Funding, the Trader Pit, and American Express Blue Cash Preferred in the description box below. Apex Trader Funding is currently running a sale. I recommend that you go have a look. Finally, guys, some disclaimers. I'm not a financial advisor. This is not financial advice. Per the Commodities Futures Trading and Exchange Commission and the Securities and Exchange Commission, trading futures involves a substantial risk of loss, including more capital than you invest initially into your account. I am not advising you to purchase or sell securities or securities derivatives, and I cannot be liable for your decisions. Trade with extreme caution. Okay, guys, thank you. Use the description, referral links in the description box below. And remember to be looking at the relative position of current market price to fair value gaps.